shortly after the Nigerian National Petroleum Corporation released its 2020 audited financial statement. Financial analysts and the media went into an overdrive to deconstruct the accounts. Despite the net income of 287 billion declared by NNPC for the year ending December 31, 2020, what stood out in the accounts were the acts of largesse by the federal government aimed at propping up the corporation. According to the audited financial statement, the government provided the support to enable NNPC have the resources, adequate resources, to continue in operational existence for the foreseeable future. Now joining us to give us the facts behind the figures and provide some insight into why NNPC enjoys a special status relative to other revenue-generating agencies of government is Umar Ajiya, the Group Executive Director of Finance and Accounts of NNPC. Good morning, Mr. Ajiya, and welcome to the morning show. Good to have you here.
Good morning, Ruben and colleagues.
Well, first, let me congratulate you and the NNPC on the release of the 2020 accounts. This is the third audited account of the corporation. But does that mean that prior to 2018, the accounts were not audited? We need some clarification in that regard.
Far from the truth. The accounts of the corporation had been audited in all the past years, except that those audits were done some years in arrears. But why these 3 years became specific is tied to the publication of such audited financial statements. If you recall, we took over mid-2019, and at that time we saw to the conclusion of the accounts of 2018, and we signed them off and we published them. So also we did that of 2019 in 2020, and now we're doing that of 2020 in 2021. This is consistent with our TAPE agenda. At the inception of our tenure, the GMD Mele Kari took us to a retreat at which we ironed out our agenda and performance targets. And that agenda specifically talks about transparency, accountability, and performance excellence. And as you will recall, that NNPC itself is a board member of the NIT organization. And at the same time, NNPC is also now a member of the international arm of NIT, which is the IT. To that extent, transparency and accountability is given, that we can no longer hide anything to the public. And so we took the decision and seek the approval of Mr. President to publish those audited financial statements which we superintended over and we signed up to. And that's why you are seeing only 3 years in our website.
Right. 2017 shows profits in the group financial summary, yet NNPC says it's making profits for the first time in 43 years. How come?
Actually, the 2017 figure therein is really not a profit. It's a reinstatement of omissions made in the 2016 audited financial statement. Had those figures been added to the 2016 financial statements, which would have reduced the losses in 2016 of about 119 billion, we would have not seen anything in 2017. So in reality, it is not a profit driven by performance in the fiscal year 2017.
Right. When we look at the profits and loss account, some analysts have said, that NNPC made profits because of the, exceptional items added on, shown in the notes, the accounts, the other income that were not in previous accounts. Can you elaborate on this? Because that's why a lot of people are talking about this financial engineering, as it were, for your books.
Quite clearly, we had some write-backs, and that has to do with impaired revenues or incomes that were not recognized courtesy of the International Financial Reporting Standards requirements, that when you are not able to foresee the receipt of income or revenue, you could not book that into your profit and loss account. And this has to do with a claim against the Federation, of which we was subjected to forensic audit and subsequently interministerial and agency committee scrutiny and report, and finally approval by the NEC to have that $1.57 billion refunded to NNPC. And because of that approval, that write back had to take place. But let me clarify one thing here. It is not because of that write back that NNPC made profit. The profit actually is driven by sheer financial prudence and operational excellence, in the sense that had we not done what we did, irrespective of whether there was write back of 713 billion or not, we would have ended up with a loss. But we went ahead to do 5 to drive the profitability of the corporation through 5 significant actions. One, there was cost optimization across the group. Secondly, we had to renegotiate all contracts and sought for discounts from contractors. Thirdly, we had to reschedule debt with our creditors. And fourthly, we had to automate almost all our business processes. And that, to a significant extent, reduced the quantum of sheer travel costs that the corporation used to incur annually. And then, finally, we had to liquidate and in some cases exit existing joint ventures that were unviable and that were sucking the fortunes of the corporation. So it's a combination of several initiatives that saw us to declaring profit, not a simple write back, as others might want to say. Thank you.
Okay, our follow-up question will be about this same write back, but let's take a short break, Umar Ajiya, and then we'll come back to you. Please stay with us. We'll be right back. Welcome back to the morning show here on the Arise News channel. Our guest is still the Group Executive Director, Accounts and Finance of the NNPC, Nigeria's oil corporation. And thank you for staying with us, Umar Ajiya. Well, I told you that there will be a follow-up question because you talked about write back. Can we have some specifics in terms of this, write backs? What write backs are we talking about? What is the nature of those receivables that were written down in previous accounts but were written back in the 2020 accounts? Are we talking about expenses that were borne on behalf of the federal government by the NNPC? Some analysts say that was up to about 100 billion naira. Are we talking about subsidy, or are we talking about what the NNPC calls under recovery? If you could just clarify that. You brought up the subject yourself, but we need to have more details because there are persons who have looked at that 2020 accounts and they have said, why would the federal government of Nigeria do this for the NNPC, something it will not do for any other business in Nigeria?
Thank you very much, Ruben. I think the issue is not anything to do with subsidy or under recovery, as you mentioned. As I said, this is a write back in relation to revenues that accrued or would have accrued to MPDC, which is 100% subsidiary of NNPC, but for which could not be recognized in the financial statements because these revenues were taken away under a forced partnership arrangement that was imposed on NNPC, and those partners involved in that transaction have lifted oil belonging to MPDC and have not paid any cash calls to the tune of $1.57 billion, and they are on their own. But appropriate government agencies are after them to recover such funds and pay back to the Federation or to the Treasury. So what in effect is happening is that here you have a company, MPDC, that has paid for assets and produced oil, but that oil was lifted by individuals or partners that did not account for those revenues. So as such, it was an imposition, more of like a kind of forced marriage. And as a consequence of that, the Federation had to bear that liability and pursue those partners to recover what is due to the Federation. So for us, it was a reconciliation between the Federation and NNPC, because on one hand, NNPC was owing the Federation some royalty obligations, and at the same time, NNPC was being owed this sum and other sums, which actually today they are still impaired because NNPC has not been refunded such sums.
Right. There was also a one-time variation in crude stock leading to an income of 250 billion naira. Could you explain what that crude stock variation was all about?
Crude stock variation, this is a consequence of reconciliation. So when there are reconciliations, typically the variance has to be accounted for. And that's what you are seeing in the books.
Right. So there's another huge concern. Working capital deficit, accumulated losses, attracting what many people will call, the challenges about the state of the company itself, as a going concern. Because a lot of people have looked at that report you put out and they've punctured it so hard. They said, if NNPC was regulated like a normal company in other karma, it's going to be difficult for it to be putting out reports like that. NNPC is only solvent because the government supports it. And, what happens if if the government does not recapitalize NNPC, for instance? There are many challenges. And owing to the fact that, you have more companies coming out of NNPC as regards, the PIA laws and things like that. And it's going to compete effectively as a company in other karma. So what's the future for it?
Yes, true to the fact that the current liabilities do exceed the current assets. But as a company, you've seen the balance sheet. It is in reality balanced. The total assets of 15 trillion equals to the assets and shareholders' funds of the same level. However, the accumulated losses over the years because of several kinds of arrangements, OPA swaps, and several other reckless contracting behaviors that led to those accumulated losses. But the trajectory is that we are gradually reducing those losses and without selling any asset. And that's why I said also we are scheduling our debt. We are also renegotiating contracts such that all obligations are being met as and when due. And by the way, all the loans NNPC had taken in the past years, there was no single default ever. So the question of going concern being threatened, yes, the government gives assurances to the auditors annually, But the combination of initiatives that NNPC has put in place, cost optimization, debt recovery, aggressive debt recovery. By the way, even the Federation is owing NNPC quite huge sums of money, especially with regards to gas to power and power generated but not paid, to the tune of almost 285 billion naira. So, in addition to revenue growth and operational efficiencies, NNPC's going concern is really not under threat. And by the way, with the passage of PIA, there will be additional assets being put into the NNPC Limited as part of recapitalization of that company.
Okay, what are you forecasting for 2021 year end? Are you seeing a trend or sustained profitability that will lead to even better numbers? Does the NNPC have a target
for sure, Ruben,
for 2021 profits?
Absolutely. If you have looked at our website, in our monthly financial and operations report, you would have seen that as at end of May, we had 147 billion naira profit. But by end of June, we are almost about 200 billion naira. And for sure, by the end of the year, we should be able to surpass the 2020 performance.
Right, we understand
and that will go a long way to reduce the...
Oh, do carry on. I thought you had finished. Carry on.
No, I said that will go a long way in trying to reduce the accumulated losses of the group. And at the same time, improve the liquidity position such that the working capital is no longer in deficit.
Right. NNPC has been engaging in very aggressive cost-cutting and financial overhauling to achieve the numbers released, or so we've been made to understand. Can you tell us more about this ongoing transformation and what we can expect from it in, say, 2021?
Yes, I think the initiative, as I said, is sheer financial prudence and operational efficiency, which is driven mainly by 5 factors, success factors. One is the cost optimization across the group. Secondly is the renegotiation of all contracts. And thirdly, we are rescheduling expensive debts for longer tenures to reduce costs. And fourthly, we are liquidating or exiting joint ventures that do not make sense and that do not bring value onto the table or into the group. But what is the key enabler for the performance of NNPC today is the absence of interference from Mr. President and Mr. Vice President, which was never the case prior to 2015. So NNPC is very grateful for that unhindered ability to perform and deliver from non-interference, as well as the sheer guidance of our board, led by the chairman, Mr. Silva Timipre.
Right. So I'd like to know more about those cost-cutting measures, because you've just said, yeah, you've optimized cost and the likes, but a lot of people are looking and say, I mean, if you had optimized cost, then, the margin should be big as regards, profitability. And a lot of people are saying probably that was not the case, So I'd like you to explain further on all of that, in what areas, did that kick in? And what was like the rebate on the final numbers that emerged? That's one for me. And two will be, as this NNPC is preparing to metamorphose into NNPC Limited, there's a 6 months timeline for NNPC to emerge, when the due diligence and restructuring and all of that to ascertain asset and liability and work like that being done, that typically precedes a go-to-market strategy, as it were, you know, to trim you and make you fit for purpose. You know, when is that going to start and finish in all of this?
Okay, thank you. I think clearly, as I said, the cost-cutting measures or optimization measures is not one single initiative. There are several initiatives within the group. One of such, as I was, automation of business processes, and such that in the corporation today, we hardly do any paper transaction. Everything is automated. So share cost has come down in terms of reduction of paperwork, improve efficiency, as well as cost of travels. That is one initiative, for instance. Secondly, the elimination of wastages and optimization of staff. Hitherto, we had thousands of staff in the refineries which we had shut down, but those engineers have now been moved to other businesses where they can add value. So that way, cost is also optimized and seen to be optimized. So there are so many initiatives within the system that are geared towards improving the profitability. Yes, the profit of 287, one could say it's small, but you should recall that 2020 was a COVID year, and we were faced with three variables: price, which collapsed; demand, which also collapsed. But we had only one option: cost. We had to do something about cost. And that's why we also now have the new COP, which is an initiative which tries to bring the cost of producing a barrel to below $10 per barrel. So that is the way we see NNPC going and sustaining its profitability going forward. With respect to 6 months timeline for incorporating the new NNPC Limited and starting to run, we believe the timing is good enough. There's a committee already set up by Mr. President, led by Honorable Minister of State Petroleum Resources, of which also the GMD NNPC is inside. These are people who are seen to deliver, who have delivered, and they have the capacity to deliver within the time frame earmarked for them, which is actually 12 months. But I bet you in 6 months' time, you will have new NNPC Limited.
Mr. Ajiya, you've been talking about operational efficiency. Can we really confidently talk about operational efficiency, considering that in terms of operations, in terms of revenue derived from operations, there was a drop of about 20% in the last year or thereabouts. And then, of course, you know, we all know that those refineries in the last audited report, we were told, are not functioning. They are running at losses. How can you have, profit when you have, assets that are not functioning? That's one. And the second one is, how do you see the future with regard to the NNPC's 20% engagement with the Dangote refinery?
Thank you very much. I think, first of all, the refineries are not the real drivers of profitability. Our main profitable subsidiaries are actually in the upstream. The oil producing company, which is our star company, MPDC, and of course, the gas producing and processing company, NGC. So the fact that the refineries were shut, it was actually a saving in the sense that we had to reduce the cost of crude oil value destruction, because we could not continue to watch. Well, you take a $1 million barrel into a refinery and you end up with an outcome of $500,000. That is value destruction, and that's why we had to stop the refinery operations until all of them are fully rehabilitated. That is that. But as you know also, you say production went down. It is a COVID year where you had massive demand destruction globally. And because of that demand destruction, there was nowhere crude will go. And all the ships globally were full and tanked up with nowhere to sell the crude. Some countries were even given the crude for free. So to that extent, we had to shut in many oil wells in order to keep costs down. So there's no doubt there was operational efficiency in those type of activities. And with respect to Dangote, yes, Dangote, we have decided to take equity. It's because of national interest. We needed, as a national oil company, on one hand, to guarantee crude supply to that refinery. On the second hand, to also be an off-taker because we are an energy company. And by the way, in terms of energy security for Nigeria, NNPC is in the forefront. And we cannot see investments of that nature, of which are viable and profitable, which have the capacity and ability to recoup such investment within 5 years and not partake in it. So that's why we were given the go-ahead to take equity in that refinery. And I can bet you that, God willing, in 5 years' time, that investment would have been fully repaid. And by the way, we are not paying for the full value of the equity. We are actually paying part of the equity from the dividends derivable from that refinery. So that's how the construct is. We are only going to part away with $1 billion initially as part of the 20% equity stake, of which is valued at $2.7 billion. So $1.7 billion will not be paid to Dangote Refinery now. It will be a combination of price adjustments on the crude that will be selling to that refinery, as well as the recovery from the dividend that the Dangote Refinery will be making.
I want to take you back to a question that was asked earlier about your profit target for 2021. I don't think you gave us an answer. What is your profit target for 2021?
I said we have already achieved 147 by May, and by end of June, we are nearing 200 billion. So all things being equal, year-end outlook, we should be far above $300 million, 300 billion naira.
Okay, so two things I'd like to ask you. You said that some of the workers of the refinery, that were not churning out product, have been transferred to other parts of the business. I mean, the NNPC group in general. But there's still back and forth as regards, some money is still going to payment of salaries and the likes. Can you just clarify that area? For us. And secondly, how is the rehabilitation work going on the Port Harcourt refinery? How's that going? And what are the prospects for gas, this year? What part of your profit will gas make up for this year by your projections?
Thank you very much. The refineries as they are, they will still have to be manned, albeit minimally with minimal staff strength. You can't leave the refinery not running. There are some parts of the refinery that you cannot shut down permanently. Otherwise, when you come back to restart, perhaps that part might not start again. So that is the technology in the refinery business. And that's why you will have to continue to see, irrespective of whether the refinery is operating or not, you still see staff costs there. With respect to your second question about Port Harcourt refinery, the rehabilitation work has commenced in earnest, and the contractor has moved to site, and work has commenced, and therefore there is an initial 24 months target for the refinery to start, so it will not be contributing to the bottom line for 2021. So we're looking at 2022, 2023 timeline.
Okay, well, we've been talking about revenue. 2020 audited accounts. What proportion of the profit that has been quoted is from importation? And then how does the President of Nigeria, being the Minister of Petroleum, how does that help the NNPC?
Okay. The importation of petroleum products basically is done at no cost to NNPC, typically. It's a duty that we are doing on behalf of the Federation as an enabler of energy security. To that extent, it is the crude oil belonging to the Federation that is being exchanged for products, and the products are sold at the regulated price, which has not changed, and the proceeds therefrom is what is swept into the Federation account on a monthly basis, except for deductions of what has been appropriated by the National Assembly. Now, having Mr. President as the Minister of Petroleum Resources, it has, in a way, been beneficial to us because this is the first time we are seeing a president and his deputy who are not interfering in the affairs of NNPC. And this is the only enabler that will guarantee profitability and sustainability of NNPC's limited viability going forward. So it is our prayer that subsequent leaders will follow the same path as shown by this great gentleman.
Well, thank you very much, Umar Ajiya. Great delight to have you on the morning show here on Arise News today. Thank you very much indeed for the clarification.
Thank you very much. Thank you very much. Pleasure having you.